Hey guys, welcome back to Valareso Capital. On today's episode, we're gonna go through the market update and we are also gonna go through the weekly watch list. So if you haven't done that already, make sure to like and subscribe for more videos like this every single week. Also guys, for anyone who's new to the channel, I'm going through an entire segment of videos in which I'm gonna explain the entire system of my edge. So if you want to see the first video, make sure to watch the video in the description called the 8 EMA and everything you should know about it. The next video that is going to be coming is going to be the 21 exponential moving average. So if you also want to be aware of those videos, make sure to also subscribe and set the bell notification icon so you won't miss it. So let's just jump directly into the charts. That way we can be ready for tomorrow. And it has also been a really interesting couple of days since we had this pullback in the market. So the first chart that I want to take a look at is going to be the VIX. So the VIX, for anyone who is not very familiar with the VIX, is basically just the instrument that measures basically the volatility of the SPY. So we tend to see a very strong correlation between the movements in the SPY, which is the S&P 500, and the VIX, meaning that if we tend to see most of the time when the VIX moves up, we're gonna see a move lower in the SPY. And this is exactly what happened this week. You can see that we had a pretty strong spike in the VIX, and we saw that with a pullback in the SPY. So a couple of things I wanna mention about this chart first. So the thing here is that you can see this purple line that I have in the chart. This is the 50 daily moving average, and you can see that the VIX has found resistance at that level for a couple of times already. So we can expect this level to act as a strong wall of resistance, basically a wall of sellers for the price. And this is kind of what happened on Friday. You can see that on Friday we actually move above it. You can see that we actually stop at the 1272 extension measured from this high right here all the way to this low right here, and you can see that we stop at that level, but most importantly we actually end up closing below this 50 daily moving average, which is the purple line on the charts. So that's actually a pretty strong confirmation that this level continues to act as resistance, at least for the time being. Now, one thing that I do want to point about the VIX, I'm starting to see a little bit of reversal patterns. What do I mean by that? You can see that we are starting to see some divergence in the trend oscillator, and we are starting to see a squeeze that is actually pointing to the upside. You can see that the momentum is actually rising in the squeeze. So this is telling me that we're starting to see a little bit more of positive momentum in the VIX. So it's really important for us to understand that when we start to see that kind of price action that is also confirmed by the indicators, we have to take it with a grain of salt. What I mean by that is that if we happen to see a pullback in the VIX, which means a rally in the SPY, or basically a bounce from support, we're probably going to see the VIX coming and retesting this very important level of support, which is going to be somewhere around 19. So be really aware that if we happen to see the VIX pulling back to 19, that is going to be a very important level of support. And if the VIX does bounce at that level and start to form a higher low, we're probably gonna see a little bit more upside in the VIX, and that will coincide with a little bit more downside in the SPY. So be aware of that. My expectation is for next week is gonna be to see a pullback in the VIX coming into these 19 levels. So that's gonna be the expectation for next week, and then we're gonna take it day by day. But that's the expectation for this level to act as resistance, and then a move back down to support. So the next chart that I want to share is going to be the VVIX. The VVIX is a chart in which I encourage you to learn more about it. This is basically the volatility. Instead of the volatility of the SPY, this actually calculates the volatility of the VIX. So this tends to set up before the VIX does. So this is actually pretty, I think that you are going to be able to find an edge in the market if you really study this instrument. You can see here that we have a squeeze that is already pointing to the upside. You can see that the trend oscillator is already above 50, which is actually a very positive and bullish indicator for this instrument. And you can see that the price action was actually pretty bullish. You can see right here that we kind of had a double bottom, and you can see right here that we have a clear top and we had a clear breakout. So this is actually pretty interesting. And you can see right here in this box right here, you can see that tight price action that was coming into that right side of this little base that we have in the VVIX. And this is something that we were talking about in the Twitter community. And then you can see that we had a pretty strong move to the upside. Right now the VVIX is running right into resistance at that 1272 extension measured from this high right here to this low right here. So we could expect to see a little bit of pause in the VVIX, and that will coincide a little bit with that pullback in the VIX. But of course, we have to be aware that the VVIX is trading above that declining 200. So if we happen to pull back to that declining 200, we're probably going to see a little bit of support there, and then perhaps a continuation to the upside in the VVIX, which coincide with a little bit more upside in the VIX. Now, what is the expectation for next week? Because that's what we care about. The expectation for next week is for this level of 100 to act as resistance, and then perhaps see a little bit of pullback in the VVIX. Next chart that I want to share with you before we take a look at the SPY is going to be the HYG. So the HYG is basically is a very important chart in the market. And if you haven't studied this instrument, this is basically what is the price action in the junk bonds. The junk bonds tend to be more of the risky assets in the market. So when we start to see a little bit more of volume, a little bit more upside in the HYG, that tends to signal that we're seeing a little bit more of risk taking by investors in the market, meaning that we're probably going to see a little bit more upside in the SPY. So basically, just to keep it pretty simple, we had a pretty strong move after this test of this 200 daily moving average. We had a very strong move to the upside. We were holding that 200 daily moving average. What happened on Friday is that we actually broke below the 200 daily moving average. And what is really interesting to see is that we actually have a squeeze that is pointing to the downside and is starting to fire to the downside, meaning that the energy of these moves this move has a higher probability of continuing to the downside. And you can see also that the trend oscillator, is also dropping below this midline, which is the 50 level. So that is basically signaling us that there's a strong possibility that we're going to see a little bit more downside in the HYG. Now, what is going to be the expectation for next week? The expectation for next week is actually to see a little bit of a bounce in the HYG. Why I'm expecting a little bit of a bounce? Because we are already at the 1618 Fibonacci extension measured from this low right here to the high that we had on this day on February. This was basically, let me see the exact date. This was February 2nd. So when we had that move into that basically kind of an abandoned baby kind of candle, right? You can see that we had the move to the upside, but then it failed instantly to the downside. So if we measure a Fibonacci extension, you can see that we are right at this level, and also that level coincides with this breakout level that we have here. So the expectation is to see a little bit of a bounce in the HYG, but probably that bounce has a higher probability of failing around this level here, or even failing at that 200 daily moving average. So we have to be really aware, because what is interesting about the junk bonds is that these kind of also lead the market. So if this is already breaking to the downside, because it is, and if we happen to rally into resistance, then we could expect. So listen to this. If the HYG rallies into resistance and the VIX pulls back into support, then probably we're going to see a little bit of a bounce in the SPY in the SPY first, and then a little bit of a pullback. So those are kind of the puzzle that we're seeing right now in the market. And then let's just take a quick look at the SPY and some of the levels that I'm going to be watching. So let's take a look at the SP mini of the ES mini futures. And what is really interesting, and we were talking about this, is that we had the pullback right into this trend line, into this rising trend line, and into this rising 21 exponential. So the pullback was expected. We were expecting this pullback. We were talking about it in the Twitter community. But now what is going to be the next step? If we connect the puzzle once again, the expectation is going to be the following. The expectation is going to be a bounce of the SPY, but that bounce is probably going to come into resistance, and the first level of resistance that I'm going to be watching is going to be the 0618 Fibonacci retracement level. This is measured from this high right here to this low right here, and it comes somewhere around 4,150. So that's going to be the level that I'm going to be watching for the SPY. If we happen to see that rally into this resistance level, which coincides also with this downtrending trend line, we're probably going to see a little bit of a rally, then perhaps a little bit more of a pullback. That's probably something that I'm going to be expecting. So just be aware of the puzzle of the things that we are watching in the indexes, and also on the other instruments that tend to signal and tend to suggest some moves in the market. So that's going to be basically it for the market analysis. And let me just quickly just jump into some names that I'm going to be watching for next week. That way you can have a plan and also add these names to your trading ideas. So the first name is going to be RTY. This is basically the IWM futures contracts, and we were talking about this. This was coming right into support, right at that rising 21 exponential, also this rising trend line, and of course this breakout level. So the probability of a bounce in the RTY is actually pretty big. So what is the idea? The idea is just buy this pullback into support, have a stop somewhere around this level right here, which is, let's just give it a take, it's going to be somewhere around, let me just take a look at, perhaps having a stop somewhere around 1900. You can use you can execute this with the TNA, the IWM, and you can use the RTY to guide your path. So probably having a stop somewhere around that 1900 level. But then the trade is going to be just looking for a bounce into the 0618 level, which is measured from this high here to this low right here. So that's going to be the first idea. Second idea is going to be the YM. The YM is the futures for the DIA, and you can execute this with the DIA. You can execute this with the UDOW, which is the leverage ETF, and that's how I'm executing this trade. And the idea here is pretty simple. The low risk entry actually happened on Friday when we actually undercut this low and rally. So if you happen to get this on Monday, just try to get it as close to that 21 exponential as possible, and perhaps using this low as your stop level. And then the target is going to be just a retest of these highs. So actually just looking for a bounce into for a buy in support, and then a sell into resistance. That's going to be the easy trade for the YM. Then if we take a look at the NQ is kind of similar to the RTY, so you don't have to take both. You can choose between the one that you consider to be the best opportunity. This one is very similar. You can see that we are coming back right into this breakout level. We're also coming back into this 0618 retracement, which is actually measured from this low right here into this high right here. So we have a strong level of support. And then the trade is pretty simple, just buying the pullback, selling at that 0618. So these trades tend to last for 1 to probably just a couple of days, probably at 3 days at most. So the trade is just looking to buy this support. Perhaps you can sell some put credit spreads if you're into trading options, or if you can just buy the NQ futures or the QQQ and just look for a bounce into this DTL and into this 0618 level of resistance, measure from this high right here into this low right here. So that's going to be the NQ. And then the other two ideas that I have two bearish ideas, but this is going to be, one is going to be on the CV futures, and you can execute this with the TLT. So this is basically just the bonds. And what I really like this setup. So you can see that we have the squeeze that is pointing to the downside and is actually starting to fire short. And you can see that we have a trend oscillator which is crossing below that 50 line. So you can see that it's below that 50 line, so that increases the probability of a continuation to the downside. And this is actually a pretty easy trade. It's a little bit extended right now. You can see that we are at some levels of support, but the expectation is if we can flag a little bit here, perhaps the 8 exponential can catch up a little bit with price, and then looking for a retest of these lows. I think that's going to be a pretty cool trade. If we happen to see this 21 and this 8 catch a little bit with price, we're probably gonna see a bear flag and then a continuation to the downside. That's one trade that I'm watching. And then the other one is gonna be in the GDX. I'm looking for a little bit more downside in gold, and GDX is also showing us some really interesting things. You can see that the squeeze is firing to the downside. You can see that the trend oscillator is starting to drop a little bit that 50 line, so that's actually pretty bearish. And you can see that we are trading below those key moving averages, and you can actually see that we are starting to break below that 50. So I will prefer to get this perhaps on a bounce. Perhaps if we get a bounce into this 50 daily moving average, into this 8 exponential, perhaps we can get it on that bounce, and then looking for a fill of this gap all the way to 28.66. So those are gonna be the ideas that I have. For next week, we have just a couple of bullish trades and we have a couple of bearish trades. Just be aware that the expectation is a bounce. So my expectation for next week is a bounce from support, but I think that there's a very high probability that that bounce is going to come right into resistance, and the level that we're watching on the SPY once again is going to be 4,150. So once again, thank you so much guys for watching. Make sure to like and subscribe, and also follow me on my Twitter channel, and I tend to share these ideas on a real-time fashion. So thank you once again, and I see you on future videos. Bye bye.